Bitcoin's market capitalization could be far greater. We could have more tooling for Bitcoiners. That's why I'm a Bitcoin DeFi guy. I think what will happen is that this just absorbs market share from the other ones significantly, but not totally, and that this increases Bitcoin's dominance. So I think Bitcoin dominance goes up if DeFi and Bitcoin gets unlocked.
Hey everybody, this episode of Supply Shock is powered by Core. You're going to hear a lot more about them later in this episode, but first, a word from our sponsors.
Core is the Bitcoin consumer chain. Stake your Bitcoin, explore Bitcoin DeFi, and earn rewards today. Visit stake.coredao.org/blockworks. You'll hear more about them later in the episode.
Crypto's premier institutional conference is coming to New York City, March 18th to the 20th. That's right, I'm talking about Digital Asset Summit, presented by Blockworks. Of course, I'll be there bringing a Bitcoin maximalist perspective to a number of talks and panels where I'll be discussing why Bitcoin might be headed to $1 million. And, well, the rest of the digital asset market just might be trending to zero. Get your tickets online today. They're selling fast. Hey everybody, Pete Rizzo, the Bitcoin historian on X here. On today's episode of Supply Shock, we're bringing on someone with a long history in Bitcoin, dating all the way back to 2012, to the days when Bitcoin was trading in and around the single digits. So I've known Dan Held for about a decade, from the time he was building Zero Block at early Bitcoin wallet blockchain, to his time in Silicon Valley at Uber, to our tenure as colleagues at the Kraken cryptocurrency exchange. You may know Dan for his bullish tweets on Twitter, but he's one of the space's best writers, one of my favorite writers, known for his series Planting Bitcoin, which really describes, I think, very well why Bitcoin is the best and biggest and only cryptocurrency that matters. Dan has been on a long journey of late, I think, collaborating with a lot of interesting Bitcoin native companies that are challenging the Bitcoin orthodoxy. He's an advisor at Taproot Wizards, Trust Machine Starkware, and others. Welcome to the podcast, Dan.
Pete, thanks for having me.
So Dan, I wonder if we could dive in there and maybe you could talk to me a little bit about, you're known for your thesis on total addressable markets, kind of talking to people about why Bitcoin, could be a $300 trillion opportunity, as you've said. Why Bitcoin DeFi is your next move?
Yeah, great question, Pete. So, let's zoom all the way back to where I kind of was exposed to the Bitcoin DeFi category, and then what made me want to leave like companies like Kraken and go do this myself and support builders in the space. So, when writing about yield, which at the time it was mostly centralized yield, which blew up spectacularly, BlockFi is a prime example. There was also DeFi yield. So you could, for example, with Join Market, you can use your Bitcoin and use your Bitcoin to basically provide liquidity for coin joins. Coin joins are a way to mix or tumble your coins. And those who want to tumble their coins pay you a small fee. And that's done in a semi-trustless manner. Same with Lightning channels. You can provide liquidity for Lightning channels and earn a yield off of that. So in my yield write-ups, which you can still find, I wrote those up as other ways to earn yield. And so that was my first exposure to DeFi. And then I wrote those up in like 2020. Since then, went to things like NFT NYC, went to things like Solana Breakpoint, ETH Denver, and got exposed to these DeFi ecosystems and saw all of this activity happening over here. And I'm like, this I think is a unique sort of new type of activity that could come back to Bitcoin. And I think that would be good for Bitcoin in the long term. People forget that Bitcoin isn't just the largest crypto asset. It's bigger than everything else combined, right? So if DeFi could be unlocked on Bitcoin, it would by far be the biggest opportunity ever to happen in crypto. Some things I saw over at, for example, what really kind of changed my perspective on DeFi, because at first, like a lot of Bitcoiners, I looked at it as like kind of like scammy, a lot of shenanigans going on over there, but there are real things going on. And the one moment that really crystallized for me how important this would be for Bitcoin was when I was at NFT NYC, and these artistic type folks were talking about how they bought an NFT for 0.1 ETH and they flipped it for 0.3, or they like sold a collection or bought a collection for a certain ETH price, and go, wait a second. They are thinking in an Ethereum standard now. Like they don't even think about Bitcoin. Like all of the assets that they're trading in and out of and how they're thinking is in an Ethereum standard. And so that was kind of a shocking moment where I'm like, okay, maybe, with folks who are exposed to Ethereum that way, like they may not necessarily go read a bunch of libertarian books and whatnot. They're just artists who want to go play around with crypto. And this was their first foray into it. And when we look at how most people got into Bitcoin in the early days, it was Silk Road and gambling. And then if you look at modern era, it's mostly speculation. People buying because their buddy's buying it next door. So if DeFi could introduce people to Bitcoin, I think that would be highly important. Plus, if DeFi could allow us to stay within on chain within Bitcoin without having to go to the real world as often as we need to, for example, like borrowing using your Bitcoin as collateral and borrowing dollars, that this would be a net benefit for the space and a huge unlock. Um, July of 2022, I decided to leave Kraken. I actually made the decision far before then, but that's when I left. And TechCrunch wrote up my departure where I lay out and synthesize my thesis for Bitcoin DeFi and why it's important. So I encourage you to go read that because it reads almost verbatim to what I'm telling you today. Back in that era, it was quite controversial to be into Bitcoin DeFi because Bitcoin DeFi was kind of this. There wasn't a lot going on. There was only really like rootstock, stacks, liquid, lightning. Lightning, not a lot of payment activity. Rootstock, pretty dead. Stacks, controversial, and liquid, kind of a ghost town. So, but for me, I was like, these are really interesting, and no one really explores these that much. So I started to explore them. And then December 2022, we had Ordinals come onto the scene, and Ordinals at Q1 2024 really blew up. Q1 2023 really blew up. And that kind of moved that Overton window. And Overton window, for those who don't know, means the window of acceptable conversation. Moved that Overton window around Bitcoin DeFi really far over. Started to see a ton more developer interest, a lot of folks coming from Ethereum and Solana back into Bitcoin, which is exactly what I was hoping for. And so that sort of was the original sort of aha moment. That was my journey along that path to deciding to build in Bitcoin DeFi.
Well, of course, a lot of the Blockwork folks familiar with Ethereum, Solana. I'm curious to get your take. Like, is who's winning DeFi as a general opportunity in crypto now, right? If the goal is to bring DeFi to Bitcoin, bring that activity, ability to earn money, ability to self-custody your coins, kind of do some of these financial primitives, who's winning that race now, according to you? And what are the big projects that you see that are dominating?
Yeah, I mean, Ethereum and Solana are the big ones. And the three use case types would be borrowing, lending. So borrowing would be like borrowing dollars using your Ethereum as collateral. Lending out your Ethereum or dollars and earning a yield. And then staking. So staking would be providing game theoretic security for proof of stake chains. Those are like the three big use cases. Like I said, mostly Solana and Ethereum. I mean, with Solana too, you've got like meme coin trading. So like DEXs. DEXs, of course, are popular on both. That's also a great use case. So yeah, that's kind of, those are the two primary platforms in which people are engaged in DeFi.
Do you see it as a zero sum though? I guess is a question, right? Because there's this whole kind of area of, this tends to be one of the kind of controversial points, right? Is that the people like Bitcoin and crypto. A lot of the Bitcoiners like being separate from the cryptocurrency world. How do you think through that? How do you think through that? Is this about Bitcoin coexisting and kind of coming up to speed with other chains in your view, and those chains maybe still existing, or is this about replacing that activity and bringing it back to Bitcoin maybe competitively?
Yeah. So there, you're amongst the OG class old enough to remember that being a Bitcoin maximalist doesn't mean at all what it means today, which today people talk about Bitcoin maximalism being like conservative, religious, God family Bitcoin and stakes. Bitcoin was antithetical to that back in its earliest day. It was purple hair, drugs, 3D printed guns, like very punk. That was what Bitcoin was. And
A mere talkie with a big machine gun.
yeah, exactly. I mean, I'm a Texan, so I'm still into the whole 3D printed guns and Bitcoin libertarian ideology. But that's where back in the day, and you'll remember this, we often said like, yeah, cool, let all these altcoins do stupid ass shit. And whatever works, we'll come bring it back to Bitcoin. That used to be the narrative. Now the narrative is more of ossification, but the narrative back in the day was like, yeah, altcoins are dumb, but if people want to buy Doge, go buy Doge. It's stupid to do, but go for it. And then the idea was like, well, if something innovative happens over there, we can bring it back to Bitcoin. And there was an early sort of people. Most people watching this are probably post 2020, but like you remember in the block size wars, like Litecoin, I think tested out SegWit before. Yeah. Like these other coins being the test net for Bitcoin was kind of the narrative. And so what was funny is that we finally saw something real over on Ethereum this last cycle at the DeFi summer. NFTs are a unique asset class. No matter how stupid you think they are a unique asset class that represents something real that people want to trade and own. I similarly don't like pink flamingos, but people can buy them. And as a libertarian, I'm like, look, you've got poor taste, but feel free to buy them. Similarly, a lot of people feel the same about NFTs. That doesn't make NFTs immoral or a fraud or anything, just because they're in your subjective poor taste. But that was a really big breakthrough where I was like, okay, this is real. This isn't just like another Bitcoin fork. This isn't like just a slight tweaking of Bitcoin's parameters. This isn't an overly complex narrative. It's to the point, and it's a real asset type. And then governance tokens I thought were interesting as well. So governance tokens being the ability to vote or control, dApps on top of these protocols, where you could get a cash flow from fees generated by the protocol itself. So, those things, like, again, and I'm not using Bitcoin's level of decentralization to make these equivalent. It's more of like, yeah, if it's a protocol, but it's not the base level, it's just a dApp. What level of decentralization is appropriate is sort of subjective. Now, for my base chain, Bitcoin, I of course want that to be as decentralized as possible, and I'm not willing to compromise in that regard. That's why I'm a Bitcoin DeFi guy. So, yeah, I mean, seeing all this activity happen, I feel like Bitcoin's market capitalization could be far greater. We could have more tooling for Bitcoiners. And to your question, around, does this eliminate Solana and Ethereum? I don't think so. Being as old as both you and I are, I thought altcoins would have died by now, but they're stronger than ever. I think what will happen is that this just absorbs market share from the other ones significantly, but not totally, and that this increases Bitcoin's dominance. So I think Bitcoin dominance goes up if DeFi and Bitcoin gets unlocked, because in doing so locks up a lot of Bitcoin. It also like drives more demand to buy Bitcoin, and so I think all of that's good for Bitcoin.
HODLing isn't enough anymore. Bitcoin is evolving on Core, unlocking yield, utility, and a thriving DeFi ecosystem. With over 250 dApps and nearly $1 billion in total value locked, Bitcoin DeFi is growing fast. Hundreds of thousands of users are already staking, lending, and building on Core's high-speed, low-fee rails. Now it's your turn. Whether you're a user or a builder, the Core Ignition program rewards you for participating in Bitcoin's next evolution. Unlock your Bitcoin and use Core. Start earning with Ignition today at ignition.coredao.org/blockworks. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. Unlock the power of your Bitcoin with Ledn. For over 6 years, Ledn has helped thousands HODL their Bitcoin while accessing liquidity, focusing on transparency, security, and trust. Learn what your Bitcoin can do for you and see why so many clients trust Ledn. Visit ledn.io to learn more.
There is the justification you mentioned about it being an onboarding tool, right? People are doing these activities. This is about bringing those activities to Bitcoin. How do you respond to people who are looking at things like pump.fun or the Malay meme coin or the Trump meme coin and saying, this is actually just stuff we want separate, from Bitcoin, because it's not activity that we think is going to create long-term users, because, people who buy the Trump meme coin, he got on Moonshot, he wrote it up, to $20, and now it's, on its way to zero, probably never to recover. Is that good? Or how do you respond to critics who kind of tout those use cases as negatives?
Look, philosophically, I understand where they're coming from, but practically and objectively, if you look at the usage of Bitcoin block space throughout history, the earliest use of Bitcoin's block space was a majority drugs and gambling. That was it. That was literally it. 2011, 2012, you had Silk Road. You had Silk Road and Satoshi Dice. That was literally all people were doing. So enough of those people believed in Bitcoin, though. They were introduced through Bitcoin through speculation, but stuck around because of sound money. And so with every cycle, though, whether it had been gambling or buying drugs, which was a little bit more unsavory, 2013, 2017, and 2021, a majority of that adoption occurred purely because of speculation. People bought Bitcoin because they thought number go up, number went up. Most people didn't know what they were buying. Let's be honest. If you're listening to this right now, be honest with yourself. When you first bought Bitcoin, did you really get it? Probably not. Even I
Well,
didn't.
I first bought Litecoin, so I was even worse. I thought that I was getting on the next thing.
The
So,
silver, the silver to
yeah, the
Bitcoin.
silver to Bitcoin's gold, right? Yeah.
So, and I'm even at fault with that too. I don't think anyone fully groks Bitcoin when you buy it. Um, but because you buy it now, you're paying attention, and then you're like, "Oh, wait a second. Yeah, I kind of wanted to make a quick buck, but hold on, this really solves something real. This solves the problem of sound money." And for me, you and I, of course, since we've been around so long, that clicked a little bit sooner than most folks, but it wasn't immediate. And most people need the onboarding of and the rush of like, I want to make money. It's a very primal thing to tap into. And Satoshi, what's funny is he even highlights Satoshi, I think, was very open-minded with what use cases might draw people into Bitcoin. He wasn't sure. So if you read his writings, he's very encouraging of people using it for micropayments. He refers to it as a digital gold. Or you could save money in it. He also mentions how purely through speculation, Bitcoin could be adopted by merely just speculating on it. That there could be a reflexive loop or a viral loop mechanic due to the speculation and there only being a fixed supply that could create a feedback loop. So we have objectively seen through the last 4 cycles that speculation is what drives adoption. DeFi taps into that in unique ways, different speculative games. You could kind of think about, that Bitcoin and Ethereum being 2 casinos. And to get into the casino, you got to buy Bitcoin chips or Ethereum chips. And then in those casinos, Bitcoin was the largest casino by far, but only had one like slot machines, just spot up and down trading, which was enough to attract a lot of people. And a lot of people came in and started to use it. But Ethereum had a bunch of shiny new machines that drew in different types of customers, artistic types with NFTs, more tech people, because tech people really don't grok money at all. And that's where tech people really were in Silicon Valley. I spent 10 years there. They were really drawn into Ethereum because that made sense to them. Whereas like New Yorker types might understand Bitcoin better. So these other speculative games pull in people that might not otherwise be interested in the base protocol. But when they play those games, they're playing them with Ethereum chips or Bitcoin chips. And even if they leave the casino, which to your point, they get burned, they leave the casino, most of them still have the chips in their pocket, the Ethereum or Bitcoin chips. And now they're thinking in an Ethereum standard. Now they better understand Bitcoin or Ethereum. And so the more speculative games, which by the way already exist, people can do spot trading, right? Like you can go trade Bitcoin on exchange and people do that all the time. My hypothesis is that more speculation of different types of speculative games and asset types will bring in more people into Bitcoin because they start to think about Bitcoin as their unit of account, as their scoreboard. And people who want to accumulate and store value in Bitcoin, that'll be majority of people in Bitcoin. But Bitcoin DeFi, I think will bring about even greater adoption and absorb that mind share that Solana and Ethereum have kind of pulled in. It'll bring some of that back to Bitcoin.
I want to talk about Ordinals. You mentioned them, about 2 years old, the protocol developed by Casey Rodarmore. This was a meta protocol on Bitcoin that redefined how Bitcoin units could be traded. They could be representing NFTs, art. I think to a lot of people, Ordinals feel like they've come and gone, that maybe they, had their moment in 2024, 2023 when they, the majority of block space on the chain. How do you think about Ordinals? Is Ordinals over? And are we looking for the next thing? Or do you think that there is still momentum for that protocol and for NFTs on Bitcoin?
Yeah, great question. Well, I think NFTs on Bitcoin are here to stay. Like Bitcoin as an NFT platform is superior versus Ethereum. One, you have the graphic asset that exists on chain for forever, very different than on Ethereum, where Ethereum, a lot of the times the NFTs are point to an IPFS file or simply just a hash of the image. So your graphic asset exists forever. It's costly to produce the graphic. So versus Ethereum, you can just go spin up 10,000 NFTs. On Bitcoin, you have to inscribe them on the Bitcoin blockchain, which are very costly. And I think that does create like a nice gating mechanism for serious projects that are only serious. And no one else wants to go spend $250,000 inscribing something if it's like a quick pump and dump, or if it's something they just want to, put out there and kind of like trash the blockchain with. Like, I feel like it's a proof of work sort of threshold for higher quality projects. There's also some other aspects too, where like you can inscribe an image on a specific Satoshi that could be more or less memorable. There's also like your inscription number, how close is it to the origination of Ordinals being created. So I think all these factors make them collectible. And so like when we look at trading cards or other NFTs, Will people choose to speculate as to the value of these based on their unique parameters? I think so. I don't think that's going to change. Now, the aggregate interest in that, aka the market capitalization and volume, ebbs and flows. We haven't seen retail come back this cycle yet. So I think once retail comes back, we'll see a surge of enthusiasm in the Ordinals ecosystem. Where right now I think we're still kind of we're in the beginnings of a bull run, but retail has not come back. If you look at Google search trends for buy Bitcoin, you look at the Coinbase top 3 app rank, we really haven't seen them come back yet. But yeah, I think Ordinals will be back. I think these are here to stay. It's sort of like asking, I think the core fundamental question you're really asking is, will humans stay humans and choose to speculate? And I think that they will. Same with NFTs on Ethereum. I think they're down bad, but I think they will be back. As much as that pains me, I'd prefer people be over on Bitcoin, but I don't, what is dead may never die. And as you've seen in this ecosystem as well, over 12 years, it's hard for things to fully die out.
Well, I think one of the things that people are talking about is the user experience, right? Most of the new people who are coming in the cycle who are not coming to Bitcoin or Bitcoin ETFs are using Solana, right? So they are familiar with the pumped out funds and the meme coin ecosystems. How does Bitcoin compete with something like that? So maybe we'll bring in runes and BRCs and some of these token standards that have been set up on Bitcoin. Can these things compete with the user experience of Solana, or are we just seeing that the reason that these users migrated, over to Solana and haven't come to Bitcoin is just Bitcoin can't offer that experience?
Yeah, that's a really good question of like, is it the experience or the asset or both? And I think with Bitcoin L2s, you'll see a lot more of this activity occur where Bitcoin L2s are highly performant. They can be SVM, EVM, and do all these things that Ethereum or Solana can do. And so I think that we'll see in my firm, Asymmetric has invested in quite a few of these. We'll see Bitcoin DeFi really flourish on the L2s as those experiences will be identical in terms of UX versus Solana or Ethereum.
Interesting. And so, what kind of things are you looking for? You mentioned asymmetric as you're looking at these projects. So, what are, I guess, are the sectors or things that you're looking at right now as you look at the field? I know you were big on, thinking that we would see a resurgent market this year. Is that still your expectation that 2025 there will be a boom for Bitcoin assets again?
Yeah, 2025, I think, will be a boom for Bitcoin and in conjunction, Bitcoin assets. Bitcoin, of course, I think, as we look at the last 4 cycles, Bitcoin always dictates the cycle. Bitcoin has to move first, get retail interest into the space, and then the alts and now Bitcoin DeFi will follow. So Bitcoin not being above like 150, 200K where retail interest might come back in. I think if we're below that, then we still have a while to wait with I think where we are on the cycle with Bitcoin DeFi, a lot of the L2s have been built. Some of them are going live this quarter, next quarter. We see a pretty big DApp ecosystem being built on these. At Asymmetric, we're a firm that only focuses, we're a firm that has a fund that I run, the Bitcoin DeFi Venture Fund, that focuses solely on Bitcoin DeFi, and that's protocols that are like L2s, metaprotocols like Arch, and then dApps and staking. So staking would be, Babylon, for example. Babylon is using Bitcoin as staked collateral for other proof of stake chains. And I think that's really cool because these other proof of stake chains have a problem where their native asset is the staked asset to provide security for the chain. And game theoretically, that's not a good spot to be in. But the use case of Bitcoin being used as a proof of stake asset is actually one that I never predicted. And I think could be huge. I mean, that could drive hundreds of billions of dollars of Bitcoin demand to use Bitcoin to stake it in other protocols. I mean, that's huge. Staked Bitcoin could provide security for dApps or other L1s or L2s. The fact that you could use Bitcoin in that fashion, the most pristine asset in the space, I think is totally congruent with Bitcoin's core philosophy of being a digital gold, a true store of value asset, a such high quality store of value of asset that is used to protect other networks. That staking use case, I think a lot of people didn't see that could be a huge one. And then, of course, out of L2's metaprotocols and dApps, we invest L2 metaprotocols and staking, we invest in dApps. On the metaprotocol side, we believe that the space is vastly underexplored. So metaprotocols would be something like Ordinals. How Ordinals work, for those who don't know, I'm not going to get too technical for you, but I'm going to just give you a very easy analogy. Is imagine we're looking at the blockchain together, and we each have augmented reality glasses on, and we're looking at the Bitcoin blockchain activity on L1. What metaprotocols are Metaprotocols would be the augmented reality software that you and I are running, where when we see activity happen on Bitcoin L1, our augmented reality reinterprets that as meaning something else. And then you and I agree that that's an alternative or layered on version of Bitcoin. So it's not really an L2. It's more of a reinterpretation of Bitcoin base layer activities. Um, for those who are old enough, they might remember this as like colored coins, for example. So we view meta protocols as very underexplored. There's a couple of different companies working in this category, companies/protocols working in this category. So yeah, for us, we see the future being both on Bitcoin L1 and L2s. On L1, block space is somewhat limited. As transaction fees go up, the activity will equilibrate between L1 and the L2s, where the L2s absorb a lot more activity, we think, over time. But we still see meta protocols playing a really big part on the Bitcoin L1, where higher value transactions will still want to be settled on the base layer.
Well, I think another part of that question that I wanted to get into is really just the price sensitivity of users and like how you're thinking about them, right? Because some of the activity on Solana, right? It's like, if I'm going to pay $0 in fees, and then maybe you get a meme coin that goes up and, goes up 100x, maybe that's a trade-off as a consumer that I'm willing to make. When you add in the Bitcoin network and just the costliness of using it, that changes, right? So I'm just wondering, how do you think through just the inherent costliness of Bitcoin? And then it seems like what's happening with Ethereum right now, I'm curious how closely you're following, is that there is a sense that the Ethereum is too costly for some of these things. And that's why some of the users are heading over to Solana. So how do you think through those elements?
Yeah, that's a really good question around the price elasticity of transactors on Bitcoin L1. Basically, how much are transactors on L1 willing to pay? It's a marketplace dynamic, right? So I think long term, it's quite obvious that only high value transactions will occur on the Bitcoin base layer, and that you'll have to wrap your L1 assets, if they're Bitcoin assets, and put them on an L2. And per the word I used earlier, it'll equilibrate. So between L1 and L2, the usage will simply equilibrate based on market demand for that block space. As block space demand goes up, people get priced out for the lower value transactions, which then pushes those to the L2s. And so we think there's a natural, healthy marketplace dynamic that will occur there. Now, have we seen that happen yet? We saw little glimmers of, a lot of people will be like, well, we've never seen a high fee environment. What was nice with Ordinals is that it sort of stress tests that idea of what would happen in a high fee environment. And so even if you don't like Ordinals, you should at least like that we stress tested it and started to think through, what does this world look like? Like, can you open and close a Lightning channel in a high fee environment? So we saw a lot of really cool things happen there, where I do think, and we should hope, that fees on Bitcoin L1 go up over time, because fees going up on L1 ensures that Bitcoin's long-term security model functions, which, as transaction fees, they have to slowly replace the block subsidy, which are the newly minted Bitcoins. As you know, the halving, which occurs every 4 years, the halving reduces the newly minted Bitcoins by half. So eventually transaction fees have to offset for that. So eventually we need a burgeoning digital ecosystem to occur on Bitcoin. We've clearly not seen that happen with payments. Payments have not driven anything meaningful in terms of both adoption and usage of the Bitcoin block space. So DeFi, I hypothesize, will be that driver. But it's a hypothesis.
The only thing better than stacking sats is staking them. With Core's self-custodial Bitcoin staking, you can earn yield on your BTC without ever giving up custody, no new trust assumptions, no counterparties, and no slashing risk. Still your keys, still your coins, now your yield. Here's how it works. Lock your Bitcoin on the Bitcoin network. Help elect a Core validator and start earning Core rewards, passively, securely, and without risk to your principal. And with dual staking, you can boost rewards by staking Core tokens alongside your Bitcoin. Institutions can also tap into Bitcoin at scale with top custodians. Don't let your Bitcoin sit idle, put it to work. Visit stake.core.dao/blockworks to start staking today. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. If you've been around Bitcoin for long enough, you've heard the term HODL and the name Ledn. Ledn has been the go-to specialist in Bitcoin lending for over 6 years. Ledn helps you unlock the liquidity of your BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. Ledn has been battle-tested with a focus on transparency, security, and trust. This has allowed them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn for yourself why so many clients trust Ledn by checking out Ledn's Trustpilot or their reviews on social media. And to learn more about what your Bitcoin can do for you, check out ledn.io.
So maybe let me drill down and ask another question about the tokens, because I do think that, really between a Rune and a BRC and a Solana meme coin, there isn't really much of a functional difference, right? I kind of had this thing that I used to say to myself, which is that a Bitcoin meme coin is really no different than a Solana meme coin, other than it has some functional relationship with Bitcoin. So why do you think that the Bitcoin meme coins like aren't maybe competing, right? Because it does seem like the Ethereum meme coins and Solana meme coins, like obviously Solana has the lion's share of that market share, but there's at least some competitive dynamic there. Is it just marketing? Or is there something like actually at a technical level here? Obviously BRCs were tremendously more expensive, but Runes, promised to reduce that, right? And then get that price point back. So I don't know. How do you look back on that A/B test or that trial there?
Yeah, so like I was never a big fan of runes. Like runes, just because you make them more efficient, that's not why people use crypto. People don't use crypto because it's more efficient. They use it because scratches a speculative itch. The minting process for BRC20s, I think, was a much better distribution method to get them in hands of early adopters. You had to spend Bitcoin transaction fees to mint BRC20s. And I think that experience plus the novelty of BRC20, even though it was very primitive and very inefficient, created, I think, a standard that was more widely adopted than runes. I mean, if you look at BRC20s are traded on Binance, and I think they have over 20 million, 50 million a day in volume. So these aren't immaterial. That's pretty substantial. Now, runes never took off, and I think that's because like no one cares about efficiency. They just care about memetics, right? Both Solana meme coins, Ethereum meme coins, and Bitcoin meme coins are all based on just memetics, right? Like it's the story behind it. It's the minting process. Is it a wizard versus a cat? If they're cat coin, wizard coin, whatever it may be, is there a community behind that? And so that's where I don't think you need a super robust architecture to deliver that.
Why do you think, maybe a second tier to that question, I really expected there to be a larger pickup amongst exchanges of listing both Bitcoin tokens and Ordinals. We saw some penetration, obviously OKX, like a really early adopter on the Bitcoin side, Magic Eden, on the NFT side, but we really didn't see kind of like a full scale penetration where, everybody who was offering NFTs was now offering Bitcoin Ordinals. It seemed like it didn't cross some sort of echelon to get over that threshold. Even, Coinbase, the Krakens of the world still not kind of listing these stuff. What's the reason for that? Is it too early? What are your thoughts on that?
Yeah, well, one, I mean, NFTs were just dead in general. I mean, you and I both worked at Kraken. I couldn't imagine in 2024 suggesting that we prioritize NFTs on the roadmap. Not like you or I had like direct influence over the roadmap, but just in a hypothetical scenario, suggesting to emphasize NFTs of any type, both Bitcoin or Solana or Ethereum, I think you'd probably be laughed out of the conference room, right? Like NFTs were dead. So that's not too surprising. What is surprising is that Binance listed BRC20s and Coinbase and Kraken didn't. Coinbase and Kraken's primary listing requirements are basically just like, will this trade with volume? And there's clear volume with BRC20s. So I never really understood that at all, because like Coinbase and Kraken have been really keen on listing the next meme coin, and you think they would have prioritized those. So that is bizarre. I don't understand that business decision because there's clear business need for it.
Do you think that's something to do with like the L2s, like on Ethereum? Because most of the exchanges seem like they're kind of hitching their wagon to this idea that they're going to create their own ecosystems.
I think it was more of like just dealing with the intricacies of having a re-architected private key management architecture to deal with like ordinals. I think that's probably some of the issue versus like, adding a new chain might have been easier. I think there's some other things as well that I can't talk about too publicly, but there are Bitcoin DeFi projects that are in current conversation with top tier exchanges to where they will be listed. So I've got no doubt that many more Bitcoin assets will be listed. I don't know when, and I can't exactly comment on which conversations are happening where, but from my understanding across, our portcos and other companies I'm talking to, that this is going to be something that shouldn't be a future sort of environment. This is atypical.
I want to get into the design space a little bit because I know, some of these innovations, or these just new features, require design. One thing that was, pretty well hyped in 2023 alongside Ordinals was BitVM, kind of this idea that you would be able to have layer twos on Bitcoin where you didn't have to trust, a plurality of parties when you were locking your Bitcoin in these chains to withdraw, something where maybe you only had to trust yourself in order to withdraw. How do you feel about these constructions? Do you think it matters to the end user whether Bitcoin has the same L2s have the same trust assumptions as an Ethereum? How do you look at this design space?
Yeah, very, very good question. And our stance at Asymmetric in terms of what Joe, Lucas, and I both put together as sort of our thesis was that we're going to let the market decide. So the first Ethereum L2 was Polygon, which is basically a federated model, which are the current construction types for sidechains like Liquid and a lot of the Bitcoin L2s that we invested in. Um, that the market has decided that architecture is okay. It's not ideal from a game theoretic standpoint, and I think you and I and others would prefer it to be much stronger game theoretically. However, and by the way, federated or threshold simply means multisig or large multisigs. For those who don't know what that means, so our fundamental thesis is that the market is what decides the game theoretic security for L2 should be, not our own subjective purity test for like, we can't hold it to a Bitcoin standard of security. They're not going to have that. I'm not asking to weaken Bitcoin in any regard like that. It's the L2s are going to have a variety of design surface area for the game theoretic security. And we've invested in a couple different methods and ways to think through it. There are futuristic approaches like BitVM and OPCat. Would require a soft fork to be implemented on Bitcoin. But with BitVM, this is a way to kind of shoehorn it in today, working with the existing architecture of Bitcoin, where we can reduce those trust assumptions so we don't have to have federated or threshold models. We think, the market has shown that it likes federated models. It's okay with that. When I spent a lot of time looking at Ethereum DeFi stuff, a lot of it basically was that. That's not good for the future. I don't think an L2 should have $1 trillion on it. That's a threshold or federated model. However, remember, these are protocols and they can be upgraded. So when they get upgraded, if OPCat gets implemented or BitVM is a bit more usable, then we can implement those changes on all these L2s. So our thesis is that it's more of a go-to-market strategy for TVL usage, adoption, users, dApp developers, and that's the more important thing to think about, that we shouldn't let perfect be the enemy of good. Remember, we're not on Bitcoin base layer. These are L2s, right? So we can play a little more risky in that regard. And again, I want super secure L2s on Bitcoin. I think long-term, that's what we need before they store too much, a large amount of value. And that's where I think we need to upgrade Bitcoin in some regard, because as you know, in the fork wars, when we had the whole battle between how do we scale Bitcoin, the small blockers, us who are Bitcoiners here today, we made the agreement, the social consensus, that Bitcoin would scale in layers. Now, to scale in layers means that we need a plethora of L2s that will absorb a lot of this economic activity and allow for Bitcoin to truly scale to billions. Lightning, while cool, awesome, and I think a needed component of this, isn't the end all to be all. And so things like CTV and OPCat allow for us to trustlessly bridge to these L2s where, for in the future, if an on-chain transaction fee on Bitcoin L1 costs $1,000, well, it would suck if everyone who's using an L2 didn't have almost the same game theoretic security. With some of these software proposals, I think we honor the social consensus that Bitcoin will scale in layers and that most people access Bitcoin for an L2, that they won't have to trade off too much game theoretic security to own and use Bitcoin. So TLDR, I think that these software proposals or these changes to Bitcoin actually have social consensus with what we all agreed upon in the scaling debate. And that this is what allows Bitcoin to, I think, scale that security as well. Because right now, a lot of the L2s, other than Lightning, even Lightning has some game theoretic issues that are quite annoying. Like if everyone wanted to close their channels at the same time, that'd be problematic. If Lightning scales to like global usage. So yeah, for me, this is sort of like, I think a very much within social consensus of what we agreed upon how to scale Bitcoin. I think that I want the future to be much stronger game theoretically, but we don't want to let perfect be the enemy of good. And we also believe that the marketplace will choose what it wants to use.
Want to talk about game theory a little bit because I think this is like maybe the underlying kind of debate amongst kind of all of these. When people ask, why is it contentious? All these kind of people building on Bitcoin. It does seem amongst the kind of elders, maybe like your Pierre Richard, Safedines, Adam Bax, that there is a kind of movement away from thinking that fees are necessary to secure Bitcoin in some way, or this idea that maybe there'll be some sort of future state in which people kind of altruistically use Bitcoin. It doesn't have to be game theoretically secure according to how these technologists view it. I think there's even maybe an attempt to kind of view some of the metrics that Ethereum and other chains kind of use for gauging consensus, by cost to attack as sort of superfluous. I know you've written about Bitcoin block space and its value. Do we need to be paying fees? Like, are fees going to be high? Do you still believe that? And what's the thesis there?
Yeah, well, I mean, and by the way, Pierre Rochard is a kind of an old father of this, but Safedin's a relative newcomer on like a Pierre your sort of scale. Like he only came about the 2018, 2019 era. So for the last cycle,
2016, 15, maybe as far back as that.
he wasn't a relevant voice in the room back then.
Yeah, sure.
No one knew who he was. So like he really wasn't even a figure until 1819. And so a lot of those sort of theories and whatnot aren't exactly, I would say, old. It's more of a new take on things.
Well, what's your feeling on the new take? I mean, do you have a problem with a future in which like maybe we don't need fees to secure Bitcoin?
Bitcoin has not been adopted nor works because of altruism. It works because of greed. Bitcoin, through Satoshi's genius, has tapped into the most fundamental part of humans, greed, and utilized that for good to build a new sound money. Human beings aren't going to change. And when you look at the basics of how Bitcoin's game theoretic security works, for those who don't know this, Bitcoin miners spend upfront costs to go buy these machines. These machines can only print Bitcoin. And so miners then pump in electricity into the machines to mint Bitcoin. And since they are compensated only in Bitcoin, their incentive to behave properly when protecting the Bitcoin network, their incentive to behave properly is high because they want to pay back the original cost of the machines plus the energy that they spent. The game theoretic attack vectors that Bitcoin really only has at this era of its life cycle is more of like a state level attack where a state decides to buy tens or hundreds of billions of dollars worth of mining equipment and use that to reorganize Bitcoin, to change it, not change it, but like to do 51% attacks and reorg the blockchain, which would make Bitcoin quite hard to use. Now, again, that won't change what Bitcoin is. Miners don't control what the Bitcoin code is, right? This is just simply the ordering of transactions. But of course, the ordering of transactions is what makes this all work. If they can reorder them, then Bitcoin's not really Bitcoin. Now, supposedly, you could just change the change the mining algorithm and then burn all those machines. However, they'll simply just buy up the new types of machines. So the only long-term game theoretic security here is if the costliness to do the attack is high enough, then it's so cost prohibitive that no one can afford it. That's the basic game theory of how the Bitcoin's network is protected. Now, in contrast to proof of stake networks are provably demonstrating that capital could be burnt to protect the network, versus Bitcoin capital is already spent to protect the network. This is also why I like proof of work for a variety of reasons. The game theory is very basic. Like, does it cost my attacker, like, would the honest actors pool together more capital to protect Bitcoin than the dishonest actors? And right now, I think the Bitcoin network is small enough to where this game theoretic attack vector is still valid. I think as Bitcoin grows, though, and becomes quite enormous, the mining industry becomes enormous, then we look at, game theoretic attack vectors and the hundreds of billions of dollars of capital that would have to be deployed to hurt it, I think that Bitcoin is quite secure in that environment. But how much money is necessary to protect Bitcoin? Like, how much game theoretic security do you need? This is quite subjective. And like, I don't think anyone has the right answer here because Bitcoin had much weaker game theoretic security in the past due to the lower price of Bitcoin, but Bitcoin wasn't attacked then. So why do we need more? As more economic activity grows and as the total market capitalization grows, security doesn't scale linearly with that, but it should directionally go up as well. So there's a debate amongst Bitcoiners and Ethereum folks around what the appropriate level, like whenever people bring up the security spend issue, my first question is always like, well, what's the appropriate level of security spend? No one knows. But we do agree that like as there's more market capitalization, more assets on that chain, more value to be protected, that the game theoretic level, I think, should go up to a certain level. And after that, I think we're probably quite secure. So like hypothetically, this is just a random number, $500 billion would be a very significant amount of money for it'd exclude almost every country but the United States to do a game theoretic attack. So at that level, Bitcoin's only subjected to a madmen sort of United States government sort of attack. And even then, there's all sorts of other game theoretic scenarios that play out here. The machines are currently owned by private companies. You'd have to like seize those. You'd have to go seize the companies that make the miners. That might take time. People could bring up old miners onto the network. There's a bunch of different game theoretic attack vectors outside of this very simple answer I gave of it's costly, and that's the reason why Bitcoin's protected. But yeah, I do think like costliness has to be a thing long term. You can't just I don't understand the argument. It's like arguing gravity doesn't exist. Like the argument that like Bitcoin could survive on altruism, I think is very weak. I don't think there's any objective reality for that. And yeah, I think it's a dangerous way of thinking and brushing aside, I would say, not current material risks to Bitcoin, but long-term material risks to Bitcoin. Bitcoin eventually has to have fees to offset the subsidy. This is basic 101 math of like, we need to have more protection around Bitcoin, and that's used through proof of work mining.
So you're not on the ossification group, but at least I'm assuming, and you haven't publicly signaled for anything, but Taproot Wizards obviously working to kind of push forward the general discussion around Bitcoin soft fork upgrades. How do you view that terrain right now? It does seem like there is a technical consensus that is slowly forming, albeit there does seem to be a general disinterest among Bitcoiners, maybe in just acknowledging or participating in the technical process. High level, what do you see as the field right now? Do you agree with my descriptions, or do you think we're somewhere else in this process?
Well, it depends on how you label Bitcoiners. I mean, 87% of Bitcoin owners don't. 87% of Bitcoin owners hold another crypto asset. Only 13% only hold Bitcoin, and within that group of 13% that only hold Bitcoin, I would say probably a majority of them would like to have L2s be more secure. So, a loud, vocal, tiny group of people that are pro-ossification camp, which means pro-ossification means they fundamentally don't understand Bitcoin. Bitcoin has undergone changes recently with SegWit and Taproot. So, there's also things like if quantum computing becomes good enough, eventually we'll have to shift Bitcoin's, some aspects of Bitcoin to fix that. There's also like, for example, in the future, there are small flaws that have to be fixed. I forget what the exact thing is. You probably remember.
Yeah, there's one like future hard fork that we need to do, and well, at least under current conditions, if nobody figures out a fix for it, will have to be done in like 50 years or something like that.
Right. I think like when you look at these are soft forks, by the way. None of these are hard forks. So that's a very careful delineation because, back with the block size wars, that was a hard fork. And so they're super contentious. Soft forks are less contentious, but they're still contentious. Anytime we try to upgrade or anytime we try to change Bitcoin, the natural inclination is not to change, right? So I would say like, CTV is pretty uncontroversial, OpCat a little bit more, but even have folks that like Blockstream on board for OpCat. So yeah, like I think the pro-ossification camp fundamentally doesn't understand Bitcoin because one, Bitcoin has changed and will change. Now we're not changing Bitcoin's rules. We're not changing proof of work. We're not changing the 21 million hard cap. Those are material. We're just talking about like slightly better scripting, et cetera, very minor things. For example, OPCat was originally in Bitcoin. Satoshi took it out just because he didn't fully understand how it might work, but it was originally in the Bitcoin core code. So, Bitcoin saying like OPCAT is adding something to Bitcoin. Technically, it's a revision to back to an older standard. So the ossification cap, I mean, most of them just don't like it because they're not technical, and they've been told a few talking points by some mouthpieces, and that's all they're parodying. Like they don't really understand why they're parodying it. They're just like, change bad. I'm not for this.
Yeah, generally we have seen the technical community come to a consensus though, and then even in the case of Taproot, that wasn't a particularly large consensus, right? There was maybe 20 to 30 people in that process, by the end who agreed that they wanted to upgrade to Taproot. It was just a matter of figuring out how the signaling and the social signaling was going to build up. What's preventing OpCTV or OpCat from getting to that point at this point, in your view? Because it does seem, I would agree, I think OpCTV, I mean, again, I'm not a technologist, it seems pretty uncontroversial. It seems like for the last 6 months, people have been talking about activation clients. What's preventing the signaling then, if it's not just kind of a larger disinterest in the technical process, in your view?
I think there's a little bit of PTSD left over from last cycle, or like, or from the kind of the hard fork wars. There's a bit of PTSD from that. Like for example, Jeremy Rubin with CTV. Like I think he just recently, by the way, he's a great actor in the space. Love his voice. He, I believe he was a little burnt out from the CTV, trying to push CTV forward, and most recently finally got the courage, not courage, but I think energy would be the right word, energy to push it again. But it's a pretty grueling process of people cross-examining you, attacking your character, um, arguing that you're a spy or something because you're trying to push forward changes. Look, a lot of these changes are extremely minor things, and people go, "Well, if it ain't broke, don't fix it." But it's like our L2s aren't in the place we need them to be. Again, social consensus. We all said, "Let's push activity to L2s," and then we had really weak L2s. Like, and it's clear that Lightning will not be the only solution. Again, Lightning's a great solution. I'm not saying I'm anti-Lightning. It's just not the only solution. So yeah, that's where I think we see. I think we'll start to see more people commit social capital around these concepts, and just we'll start to see the ball rolling there. I do have a funny take on this, where I do think that whatever gets implemented, that'll mark the top of the Bitcoin cycle. Like whenever the software proposal gets consensus and there's like a activation date, that activation date's going to be the peak, because there's going to be a narrative feedback loop of people being like, oh, well, like, oh, that OpCat, CTV, whatever it may be, that's good for Bitcoin, right? It's an upgrade. Like think about the retail mindset. They'll be like, oh, it's an upgrade to Bitcoin, good for Bitcoin. Price is going to move up to that. It's going to like buy the rumor, sell the news. So that's kind of my funny take, is like, that could be the top of the market, which is whenever it gets activated.
Something I wanted to see, especially when Ordinals came out and there was this kind of, revival and kind of building on Bitcoin or just these different types of applications, was a sustained market activity in order to make the justification for some of these changes. So whether it's, OpCTV or OpCat, I think, talking to folks like Peter Todd, they'll say, the use cases for these, potential upgrades are underdeveloped. And that's kind of the line in the sand there. Do we need to see a larger kind of like revival of kind of these different Bitcoin asset based use cases to get to a point where there's technical consensus? How do you view that?
Well, so first and foremost, like ordinals are on Bitcoin L1. So this even wouldn't be applicable to the conversation around CTV or OPCAT, but that's more about strengthening connections to L2s. So, yeah, I would say, like, if you want an example of market activity, just look at Ethereum and Solana. Like, it's clear there's a ton. Have we not seen that on Bitcoin? Is that due to us not building it, or there being a lack thereof? My approach to this, which very much follows my career, is that it's a marketing problem, right? Like, I think that for a while, Bitcoin is just observed as this like dumb rock and no one wanted to go build on it, and no VCs were investing on it. But we have memed Bitcoin DeFi into existence, where all of these technical components existed. And myself and others, we push forward this narrative to where now there's like big crypto VCs cutting checks into Bitcoin DeFi. There's billions of dollars being deployed into TPL on Bitcoin DeFi. There's tens or hundreds of thousands of new users in Bitcoin because of Bitcoin DeFi. So like those are clear examples of memeing this into existence or marketing this into existence actually led it to happening. Bitcoin, if it was created in a forest and no one discovered it, doesn't mean no one would ever find out about it, right? Like Bitcoin itself needs marketing too. Number go up is the primary marketing mechanism. Um, but yeah, I think like Bitcoin had a primary, like Liquid and Rootstock should have been far more successful. And the reason why we can actually look at an exact A/B test that was done here is because you had Polygon versus Rootstock and Liquid. And so that's where, based on that A/B test, because they all launched quite a long time ago, based on that A/B test and looking at what was the differences between them, marketing. That's basically it, because they were all side chains, right? Like they're all side chains. Polygon is a side chain on Ethereum. Rootstock and Liquid were side chains on Bitcoin. Polygon was successful. Rootstock, Liquid were not. So if you eliminate all the variables there, you're really just left with marketing. You could argue that the users are different, but I don't buy that. 87% of Bitcoiners hold other crypto asset. So yeah, that's my take on it.
This is a Bitcoin podcast on a crypto network. If you were going to make the pitch to people who are listening who are building on other chains, why come to Bitcoin now?
Yeah, great question. I think if you had come earlier, that would have been bad timing. I think right now is the exact right time. You've got a bunch of Bitcoin L2s and metaprotocols launching with healthy ecosystems that are being developed. If you're going to go build a dApp, you want to build it for the platform that has the most users and liquidity. That's Bitcoin. Bitcoin's architecture, though, the L2s and metaprotocols hadn't been fully developed yet. So I don't think it would have been a good time a year or two ago, but now is the exact right time. A lot of these L2s are launching, having mainnet. They already have launched or are launching. So if you're curious about building in Bitcoin DeFi, I highly recommend you take a look now. Building, if you think about it from an app store perspective, you want to build an app in the Apple App Store or Google App Store or some esoteric third party. Well, you're probably going to want to build it on Apple or Google because those are the top two app stores. So, with Bitcoin isn't like Apple or Google. It's like both of those combined, and then whatever's left over is what everything else has. So that being unlocked, this app store being built is what has been happening with Bitcoin DeFi. So now is the exact right time to go check it out.
Well, Dan, got to ask you, I know you were out in force last cycle with the super cycle theory. It was going to happen. 2025, we've got nations talking about buying Bitcoin, some sovereign wealth funds, United States talking about strategic crypto reserve. Is this the super cycle? Is it happening now? Or do you think 2025, it's going to be boom and bust as we've seen in all the cycles before?
Great question. Well, one, humans don't change. So it still will boom or bust, regardless of if it's a super cycle or not. I felt like the super cycle might have been the right time last time because it was like if governments start to adopt Bitcoin, if people start to understand what it's about, if institutions adopt it, that could lead to a cycle where price discovery would be enormous of hundreds of billions of dollars flowing into Bitcoin, even trillions. Definitely early, I'm definitely wrong on that last cycle. But as many thousands have reminded me on Twitter. But, it's so funny too, because everyone else, whenever they're super bullish, I see people getting retweeted for being super bullish now for the exact same thesis. Is what it is. But
Well, maybe let's just ratchet it up. $1 million to cycle. What happened?
I'm thinking more of 150 to 250K. Seems
Okay.
about right.
Time has mellowed your enthusiasm or your bullishness. Then.
A little bit. You're getting badgered on Twitter by a bunch of plebs, for being, oh no, he's too bullish.
Mhm.
It's more of like, yeah, I think Bitcoin let's put it this way, Bitcoin at 100K, that is not the top of Bitcoin. I think that would be, and again, 150 would be like my most bearish case. 250, I think, is probably like my median case. But yeah, I would love to be proven wrong and to go far higher though.
Dan, appreciate you being on the podcast. It's been Supply Shock. You can check it out wherever you get your podcasts. We'll see you at the Digital Asset Summit, March 18th to the 20th in New York. I'll be there bringing a Bitcoin perspective to the crypto conference, chatting with folks on panels and in sessions. Get your tickets now, blockworks.co, and check us out next time. We'll be back.